All right, this is assignment 4 in accounting, business accounting. Um, Before I get started, I want to say that I wasn't able to open the key example, so I'm not sure exactly how it's supposed to look. But according to the directions that you gave on the platform or whatever, I tried my best, to follow it as closely as possible. All right, here goes. All right, today is October the 23rd, 2016, and this is the Gemstar Productions financial report as of today. First of all, I would like to say that I'm very excited to be brought on as the production accountant for the company. I look forward to working with you guys for a very long time to come. Okay, our balance sheet shows that we have our assets versus our liability and the equity, and it shows that everything balances out so far. Our assets is $66,486.45. Liabilities and equity is the same. So basically, our company is in stable condition. Our profit and loss standard versus actual what we actually made. As you can see, our revenue was a little bit off. We made a little bit less than what we expected, but our net was actually better than what we had expected to bring in, and that's a more or less a result of a little bit hit or miss. We stayed within our budget in most accounts, but accounts like insurance and office supplies, we were a little bit off, but it balanced out because we actually was able to save money in payroll expenses. All right, in our cash flows, this is basically a representation of the money that was brought in as a result of income, investing, loans, and also this money was counted against purchases, major purchases and liabilities, physical purchases. Physical purchases, and basically the cash that we have on hand now is about $50,700. So we're still good. We're pretty much in a good place right now. How do we keep that up? We need to keep a couple of internal controls in place. We need to possibly have a separation of duties. Whatever responsibilities that are needed, we need to kind of distribute them equally, so one person won't have too much of a load to carry. Also, we should have documentation of basically all the transactions that are done within the company. It would be preferred that we do electronic transactions. It's easy to basically to keep up with. But in the case that we are to do a physical transaction, cash check or money order, something like that, we always keep documentation of that signed off by a member of management. Cash control is basically an extension of documentation. Only except the fact that not only do we keep record of transactions that are being made, but we would like to limit those transactions to members of senior management or a trustee designated. All right, directional financial control. Basically, this is going to require a lot of monitoring because we need to know at any given moment how the what's the financial health of the company. Basically, we would like to try to have it on hand, and so if anything major and unexpected were to come up, we can catch it in time. So basically, we would designate somebody to monitor these things. Our reconciliations. In reconciliations, we're going to we would like to try to keep a record of everything, all transactions between us, between vendors, um, suppliers, and different things like that. That way, when the tax year comes up, we will basically keep ourselves in the clear, make sure that our whatever records, for whatever reason, if they were to ever come back or to be questioned or audited, we would basically have our end of our transactions covered. All right, key terms and concepts in this class that really helped me out with this class. Learning the accounting formula was probably the most important to me in learning how accounting works. Understanding what assets are, what liabilities are, and what equity is, and knowing that equity and liabilities should equal to the assets in order for the balance sheet to check out. Knowing what payables are, interest payables, accounts payables. It was a little bit confusing about knowing exactly the definition of what a payable was versus what a receivable was, and knowing what a payable is now and receivable as well helps me to more or less to understand and keep things in order when quantifying or classifying what money is going where. Common stock, I didn't know what common stock was exactly. So learning that common stock is basically proof of ownership. If the company were to liquidate, how much of whatever money is left over is owned by who or is owed to who. And that is the end of my financial report. Thank you.